point, I have to look at that intraday graph of the Nifty because the comeback looks unreal given the news backdrop. Raamdeo Agrawal, in the morning when I asked you if long term comes back, what will be the market impact, and the instant answer was kuch nahi hoga. And I think that is what has happened. Long term has come back and market ko kuch nahi hua hai. So now that the event risk is behind us, what is next? New high, recovery, party at Motilal Towers tonight?
No, we start, I mean, now the domestic flow, corporate performance, quarterly results, I mean, this entire discussion on budget will be there till tomorrow morning. In fact, discussion is more or less over because budget is presented. And good thing, I think the biggest surprise for me is, I mean, of course, the capital gains taxes come, but the real surprise is that they have grandfathered very honestly till yesterday. So I think you can't ask for more. And paying 10% capital gains tax, but I think the STT also on, I think there is going to be no impact for at least 1 or 2 years, but longer term, the difference between short term and long term is gone. Now so nobody will care whether they are paying long term or short term. Now it is the whole behavior of the investor is dependent on how long he wants to hold or he is willing to flip the stock. So my sense is that the turnover in the market will increase because nobody cares now about when they are selling, because even if you hold for 10 years and still you have to pay 10%, so why should I be holding it back? So my sense is there will be the difference between short term and long term is the biggest change I am seeing in investor behavior.
Right. Mr. Raamdeo Agrawal, just hold your thoughts there. I will take a quick question to Shaktikant Das because I think we've overshot his time here with us. Are you surprised with the market reaction? There was so much of hue and cry one was making about the LTCG. That stays with the with STT, and yet markets seem to have ignored that cue.
No, as I said, before the budget presentation, I had said that the market will take it maybe for a few days. The market will react adversely, but then it will settle down. And it's quite, one is very pleasantly surprised that within few minutes the market has, come back and it's reacted positively. So which means that the market had expected it. The market had, discounted whatever was critical from their point of view. And the grandfathering clause and the fact that that 1 lakh up to 1 lakh gain has been also protected, it means that it's a fair tax. It's not arbitrary. There is no retrospectivity, and at the same time small gains by small investors are also well protected.
All right, Mr. Das, really appreciate you joining us with your perspective through this budget coverage right here on ET Now. Budget architect of last year, joining us and helping us analyze Budget 2018. Thanks for joining us here on ET Now. Swami, I'm coming to you in a minute, trying to get a word from Dr. Pawan Goenka before we thank him. And Dr. Goenka, rating, what is your rating of this budget? Let me put you in a tricky spot. How would you rate this budget? And also, more importantly, how would you, what do you think they've missed out on? Other than the corporate tax cut, which you think should have happened, what else do you believe they could have done and they've missed out on? What has been missed in this budget?
Wasting time sitting here, I cannot be doing that.
Oh, sorry.
Dr. Goenka? Okay, I think we've lost the link there. Let me get ratings then from both you, Mr. Das, and from you, Swami, your rating of the budget. Mr. Das, you go first.
No, I think that is the domain of Swaminathan Iyer, so I'll leave the rating to him. But overall, as I said, it's a very comprehensive budget and it focuses on all critical sectors of the economy. So very focused, very comprehensive.
So on the lighter side, when the mics are down, how to pick it up also.
Indeed. Swami, your rating of the budget before we take a break.
Okay. I will say that of all the election budgets I have come across, this is the least populist.
Okay.
And that needs highlighting.
Yeah.
Okay.
We talk about individual things. We aren't somehow what did not happen. So I would say of all the election budgets, the least populist. To me, this offsets some disappointments on the fiscal slippage, on the rise in the, on the import duties. Far from going towards ASEAN, we are going away from the ASEAN rates. So on balance, I would give it 6 out of 10.
Okay, on balance, that's a generous rating by Swami, 6 or 10.
I think it's exceptional that you have not gone populist. despite all kinds of predictions of populism, they have steered clear of that, and that definitely deserves a pat on the back.
All right, so despite the many misses, the fact that they haven't gone completely populist is a big sign for Swami.
Yeah, we've got Raamdeo Agrawal, Purinjuj Velia joining us in just moments from now, and a whole host of other market experts as well joining us. So do stay with us, slipping into a short break, but Nikun's going to take it forward with the market action in just moments from now. So keep it with ET Now.
Well, if you're a bull, you need to smile, and smile once again, because STT stays, long term has come, and markets are not cracking. I mean, this is like, you know, one of those.
The market really has a mind of its own. I'm completely convinced today.
This is a bull market. When you make excuse when there is bad news, and you don't care about, when you capitalize on good news and you make excuse when there's bad news. So that's picture perfect kind of a scenario. We are in a bull market, and someone who's been telling me again and again, you know, we are in a bull market is Raamdeo Agrawal. So Raamdeo, my simple question to you is, the scenario which we were working with in the morning has got challenged, and typically in the short term when the scenario gets challenged, markets always react and sometimes overreact. But today, even the long term is back, STT stays, markets are not cracking, and it's quite puzzling.
Yeah. So one of the, I mean, I heard the entire speech. One of the things I heard is that finance minister was wanting to do 25% tax rate for everything, but he restricted it to the companies of up to about 250 crores turnover. So there is a hope that next year there could be a better proposal on that side. And in capital gains, the grandfathering of the gains till yesterday, I think this is not heard of in India. Domestic investors have not experienced this kind of relief by the government. So I think on the whole, and the corporate side is also not impacted. So I thought it is on the whole, it's a very balanced kind of situation for us.
The short term markets, it's all about sentiment. In the medium term, it's about liquidity and perhaps earnings. What do you think this budget has done to ensure that profitability goes higher, cash flows go higher, because that's how you value future companies, either on cash flows or projections of growth?
I think on the whole, I felt that there is a lot of focus on the farm side. I mean, 10,000 crores they have, very rightly so, they have put 10,000 crores on fisheries and aquaculture. I think that's the India is going to become shrimp or fishery capital of the world. So that's a very upcoming new industry. So the focus is perfect. They are listening to the requirement of the industry, and that is completely rural in character. So I think there are many other this thing, and even 5 lakhs of health insurance. I mean, it's almost like a health insurance for the entire country of 5 lakhs. That's, I mean, I don't know how effective that will be delivered, but that's also a huge opportunity for the entire general insurance industry. So I think the whole focus has been on the masses, on the rural, on the farm side, without impacting the corporate side, or basically they are the taxpayers. So without impacting the direct taxes or corporate, I think it's I mean, you can't expect anything more than this.
Raamdeo, you know, there is a mention in the budget speech that SEBI will now make it mandatory for large corporates to raise 25% from the debt market. That means that government is committed to make the debt market more vibrant. But is that also bad news for banks? Because if large part of corporate borrowing is done from the debt market, then whom will, you know, banks lend to? Because large corporates which have credibility will only get money from the debt market, and if these corporates don't go to the banks, then your credit numbers indirectly will start looking slightly shaky.
But we don't have the data how much actually they are borrowing right now, because the all the large corporates, they don't actually go to the, because the intermediation charge, the banks have a lower rating than the large corporates themselves, and the cost of intermediation of the bank, I mean deposit rates plus your regulatory charges plus operating charges, they all end up at about 8.5–9%. So most of the corporates, they are able to borrow actually lower than that. So I don't see that to be challenge for the banks, but one has to see how much they are already borrowing. My sense is they are already borrowing more than 25% from good large corporates are borrowing more than 25% from the same bond market.
Wait up with one final question, Raamdeo. There's also mentioned that there would be a tax on dividends which would be given by mutual funds. Is that bad news for debt funds?
Yes. I don't know about debt funds because I don't do any debt funds. But even equity mutual funds will be at parity. But I think the hurt is because the equity mutual fund dividend is only a small portion of the total gain, whereas in debt funds dividends are the total gain from the fund. So I think the impact will be felt a lot more by debt funds, but my understanding is very limited on that.
Really, get that punchline going from you. When I say the budget has come and gone, time to move on, don't worry about long-term capital gains, and that is something which markets have already factored in. I mean, I'm amazed, Raamdeo, with long-term and STT staying, the reaction did not last for even days, it lasted for a few minutes.
I'm not surprised at all. I told you in the morning, I mean before your question was over, I told you there is going to be no impact because market is sitting on a very different kind of demand supply situation. The kind of inflow which has come in January, people are not bought in. There is going to be again demand coming through, and economy is coming back. What drives the market is what's happening in the economy. You see the corporate results. The aggregate profits are already up by 29%. You will see the March quarter will be even larger. The earning blast is going to be there for next at least 4 to 7, 8 quarters, and it feeds itself. That is more powerful than capital gains tax, because in any case the stock is not determined by the capital gains tax. It is determined by the corporate earnings and corporate earnings growth, and that is not impacted at all. In fact, if you see the things which are done for the rural India, that is going to give a lot of leg up to many rural oriented like cheap motorcycles or housing projects and those kind of things. They are going to get a lot of boost. So I would think it's on the whole it is a positive thing, but this event risk is also gone. We have to get back to the business.
And Raamdeo, thank you for joining us. We've been beaming live today from the Motilal Oswal head office, and so thank you for your hospitality once again. Always a pleasure to have you on the show. And I love that premise which they have. It's such a lovely 8th floor property they have. You've been there, right? It's one of those fancy icon properties now.
Oh yes, so thanks to Raamdeo and to Motilal Oswal for hosting us in Bombay there. But let's get a quick word.